Sofi just landed a game-changing deal that's sending shockwaves throughout the fintech industry. The 2 billion US dollars partnership with Fortress Investments Group is a major coup for the company. But what's behind the move? Hey there, Tamir from Fibonacci-Traders.com here with a special stock a day video. In this video, we will take a closer look at the deal and what it means for Sofi's future growth and profitability. So like, subscribe, and let's talk SoFi. SoFi just landed a jaw-dropping 2 billion US dollar deal, and if you're wondering how this will impact your investment, you're in for a treat. In this video, I'm going to dive deep into SoFi's latest power move that got the market buzzing. This isn't just an ordinary deal, it's a major deal. Companies make partnerships all the time, but trust me, this 2 billion US dollar agreement with Fortress Investment Group is anything but ordinary. Strategic masterstroke might come in mind, and it's going to supercharge SoFi's growth and profitability. Let's break down the deal in a nutshell. SoFi has landed 2 billion US dollars loan platform business agreement for personal loan with funds managed by Fortress. That's a bit of a mouthful, so let me break it down in a simple way. Essentially, SoFi will be referring pre-qualified borrowers to loan origination partners and originating loans on behalf of third parties. They're kind of being a matchmaker in the world of personal loans, and Fortress is providing the venue for this service. Let's put it into perspective and compare it with some of SoFi's previous agreements, like the one with BlackRock. That deal was worth 250 million US dollars, which was still a lot of money, but the Fortress deal is 8 times larger. It's like Chihuahua versus Great Dane. Both are cute dogs, but one is a little larger. The share size of the deal speaks volume about Fortress confidence in SoFi's loan origination and their underwriting capabilities. They're basically saying, we trust you with 2 billion US dollars of our money. And that's a pretty big vote of confidence. And for the market, investors were doing the happy dance as the news came out. The stock price jumped quite significantly, as we will see on the chart later on. But it's more than just a big number. It's a crucial part of SoFi's evolving strategy and what's I really want to unpack. CEO Anthony Noto has been very clear about SoFi's game plan. First, diversification. SoFi is moving towards less capital intensive revenue sources. They're focusing on fee based income, which typically investors value higher than interest income. The Fortress deal allows SoFi to serve more members and expand their financial offering. Now, let's talk numbers. We don't have the exact details, but we can make some very educated guesses about the financial impact of this. First, SoFi's could be looking at an upfront revenue of about 40 to 60 million dollars just for originating these loans. That's a very nice signing on bonus, but it doesn't stop there. They could rake in 10 to 20 million dollars annually just from servicing and performance fee. Then there's the cherry on top. SoFi's high-tech platform means they can process these loans with a very minimal cost. We're talking maybe 50% of revenue going to expenses, and that's a very high margin business. As an 85% margin, potentially, we're looking at a profit about 42 to 82 million dollar from just this deal alone, and that could really boost SoFi's earnings per share by 4 to 8 cents, which doesn't sound like a lot, but it's a big deal. So what's the risk? Well, the brilliant part is SoFi is transferring most of the credit risk to Fortress, so they're getting the reward without taking all the risk, which is rather clever. Plus, SoFi is known for attracting high quality borrowers. They're called Henry's high earners. Not rich yet, but they will be. They typically default at the very low rates and they also borrow more. All in all, the deal could be a game changer for SoFi. It's not just about the immediate profits, it's about setting up SoFi for long term growth and success. And that is what smart investing is all about. So, if the deal is so good, why is Fortress agreeing to it? Well, let's look at from their perspective. Fortress manages about 45 billion US dollars in assets. So why are they keen on partnering with SoFi? They spotted a shiny new toy in the playground and they want it. They're obviously impressed by SoFi's ability to innovate and cook up valuable credit solutions. It allows Fortress to diversify their portfolio into customer loans, which could be a nice diversification for their existing investments. But the really exciting part of it is this 2 billion US dollar deal might just be the appetizers. There is a potential for this partnership to grow even bigger in the future. We need to understand that SoFi is shifting from being a balance sheet lender, lending their own money, to more of a loan origination platform. They're moving from being the owner of the restaurant to being the matchmaker, connecting hungry diners with great chefs. Where do you think the margin is better? Is it the guy who's paying the rent on the restaurant and employs everybody? Or is it the smart little app that just sends people and collects the fee? Of course, it's the later one. So, juicy benefits are here. This fee based revenue is valued higher than traditional lending revenue simply because of the high margin. SoFi already has a very healthy gross profit margins, 82%, which is very impressive for a bank. But they've been very cautious about cash burn. The Fortress deal sort of like finding a way to keep the engine running without burning through your own fuel. You're using somebody else. So, what's the risk? If the market goes belly up and everybody defaults on their loan, then that isn't good for the whole space. SoFi is managing to offload a lot of this risk to other parties, which is a smart move. Plus, now that BlackRock's done 250 million US dollars, Fortress has done 2 billion US dollars. Maybe BlackRock will come back. Maybe they'll do 2 billion or 6 billion or 4 billion. The potential for more partnerships and bigger deals here is what's getting the market excited. And these kind of deals actually leads to higher PE multiply for the stock because we know they're using other people's money. They're collecting fee revenues rather than lending out their own money. So less risk, higher margin, and the market appreciates it. Therefore, we should actually see the whole valuation shape up for SoFi. Now let's take a look at SoFi's chart. As we can see, the 1050 area, very difficult area of resistance since July of 2023. Each and every time, one, two. It started over here in March of 2022, and then since July of 2023, one, two, and just few days back, number three, rejection, breaking above it, and we will get the run towards 1230, and in my opinion, even towards 1520. All we need to do is follow price. Also, we have earnings coming up end of this month, October 29th. For now, as long as SoFi is above the 937, we're good to go. Long continuation, and as we can see, we have bullish on the daily, bullish on the weekly. With the last previous 2 days, we had some pullback. As I said, 937, it's all the support. Otherwise, we are back to close and fill this gap at the 9. So I hope you found this video helpful. If you did, like, subscribe, and check the links in the description below for more educational resources. Until the next video, stay safe.